The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as the dust settled on Tuesday's trading session, this market started off fairly quiet and then just kind of fell out of bed across the grain and oilseed trade. We're going to try to make sense of it. Here to join us and walk us through things, we say hello to our good friend Matt Bennett with agmarket.net joining the program today. Matt, always good to catch up with you, sir. It was good to see you a few weeks ago in Orlando for Commodity Classic, and good to have you back on the program. Hope you're doing well.
Oh, absolutely. I'm glad to be here. Yeah, it was sure nice down there. I actually talked to a couple folks around home that were down there last week. So the week after you and I were down there, boy, we had perfect weather. And some of those guys last week had some cold days. So pretty fortunate. I was super fortunate having my wife and kids with me, that they were able to get some good weather too, because they spent more time at the pool than what they did in the trade show floor. So it was a little bit different than what I did, but regardless, we all had a good time.
Yeah, we did have a good time. And, you mentioned those cold temps hitting most folks here the last week and change. And, we're getting closer to spring planting season, or at least we should be. But, cold temperatures slowing us up a little bit. And, I think something else that could maybe be on the minds here with a week this week that things are fairly quiet getting into the field is this market situation, Matt. And I know we got all the banking worries. We got the Fed. We're getting that 2-day meeting going on here, waiting to see what they will do. This grain trade, though, just fell apart as we went through Tuesday's session. What's your take on it, Matt?
Yeah, I mean, first of all, I just want to tell you, I was actually up in Minnesota last week. I was northwest of Mankato. I stayed in Mankato, and so northwest of Mankato, and then traveled back down to the Austin area. And the farther north you go in Minnesota, those guys are a long ways away from farming. There's a fair amount of snow up there. So I do think, especially given the forecast is cool and wet, is it supposed to be for a lot of us? I think, if you're talking about this 3-4 weeks from now, it could get the market a little bit excited. But as far as today goes, you came in here, the overnight was up. Things looked good, at the start of the session. It had a nice feel to it, whereas risk off lately has kind of been the theme. And then you come in here and all of a sudden beans are moving lower, corn's moving lower. Corn tried to make an attempt a couple of times to get back to unchanged. One thing that you notice, though, it's still a little bit of this bull spreading action. It's very interesting to note that, your front month is certainly in higher demand, if you will. I got to think that this will be interesting moving forward, because with spreads acting like this, and more business to China this morning, I tell you what, I know the funds right now just seem to be, who cares? The story's over with type situation. We don't really want to be super long commodities as far as the ags are concerned. That's kind of what I feel like they're saying. But, I'd be a little concerned, having that stance, especially given the fact that, world production has dipped so precipitously with this Argentine situation. And then you look at the demand that the U.S. is seeing. It's no coincidence, that the U.S. is getting some of that demand, because if I'm China and I'm heading into Safrina, heading into the U.S. crop, I don't necessarily want to put all my eggs in the basket that we're going to have ample world production, because if we don't, after what's happened with Argentina, I'll tell you what, you could really be sorry that you didn't cover some of your needs.
Very, very true. Well, and a few things off your points there, the funds. I know we're caught up on our CFTC data, so we know their position now. It's no secret. I wonder, with all the banking concerns and everything going on with the Fed, to your point, why wouldn't funds be looking to, move some money to commodities as a safe haven, so to speak here, Matt?
A lot of times they do. You see somewhat of a safe haven, but sometimes when it's a risk off event, it's you know what, we're liquidating positions and taking our money to the sidelines type situation. If they're keeping their money in the game, I've got to think the commodities would be maybe their preferred choice, just due to, like you said, safe haven, a little more stable situation for them than being in the equities. But I don't know. At this stage of the game, I think there is a fair amount of fear. Obviously, you've got some bank defaults going on. If the Fed does go ahead and decide to go up 25 basis points, like a lot of folks feel they will, then I think a lot of the trade is going to say, good Lord, what's it going to take to get them to pump the brakes, so to speak? You've got to think the Fed's got a lot of pressure on them to at least just step aside for the time being, and kind of see how this plays out. But it seems like an overwhelming feeling most of us are sharing that, essentially they're going to go up a little bit here today. So it'll be interesting to kind of see how that plays out. But I think moving forward, we've had one heck of a ride for these agricultural markets for sure. I've been a little bit cautious, bearish, call it if you want, most of the winter. But I'm starting to, I guess, feel like, at some point you got to find some support in here, especially, I guess the best way to explain it is this Argentine crop failure could have bought us some time. Does it buy us a whole crop year? I don't know about that. But I think that if you wouldn't have had that, Jesse, I think the prices would look even worse than what they do today. That's the unfortunate reality. I think that's kind of propped us up a little bit here.
You mentioned the corn sales to China on Tuesday morning, another set there, bringing the total from last week and today to 88 million bushels. To me, it feels like that sale at least maybe helped the corn market stabilize a little bit on Tuesday. What's your thoughts with all this business we've seen to China here? Because basically it seems like the U.S. is just the only game in town right now for corn.
Yeah, I mean, that's part of the reason why the market, I think, was up. I mean, it was up on the overnight, but then you got that sale and you thought, well, geez, maybe we're going to stay up 3-4 cents, and then I walk away, get a cup of coffee and come back, we're up a penny. It's like, good night. Kind of a frustrating situation for a lot of producers. I know that people are sitting around here saying, well, if we could get a little rally out of this thing, we're going to go ahead and sell some corn. But I think we got to be very well aware that the prices we see both for old crop and new crop are still historically awfully good. Now, whenever you look at China, 88 million bushels, the USDA cut exports 75 million from February to March. Does this 88 totally account for that? Absolutely not. But what it does is it gives you a little bit of enthusiasm that actually we're trending back in the right direction. Inspections are picking up a little bit, and so I've got to think that, one thing I said before the March report to a few people, and I may have told you, I don't know, but I said I really kind of feel like the USDA is going to go down on exports in March. Then they're going to have to come back up later. They have the ammo to do it. Don't get me wrong. But at the same time, the Chinese, I don't think that it's at least in the grain trade world, it seems to me that it's not a secret that the Chinese are maybe a little bit short corn versus what they kind of want to have on hand. So can they wait it out for this safrinha crop? Again, I think that this is a risk management tool for them. They're trying to spread out their risk a little bit just in case, you see some of this wacky weather that we've seen, in South America maybe spill over to the safrinha crop. With it getting in the ground a little bit late, you definitely have some concerns as far as the dry season after pollination. And you also have actually some concerns over freeze events once you get this safrinha crop planted too late.
Well, and with corn as well, you made the point there. Some farmers may be waiting to see a little bit of a rally here before making some sales. But I would wonder, devil's advocate to that. You and I were talking before we jumped on air about input prices and looking at things here as we get spring planting going. I mean, to me, if 556 East corn is your worst sale and it pencils out, why not get started at that level in case something happens and we fall even more, Matt?
Yeah, I mean, here's the thing. For those of us that quote unquote prepaid chemicals, most of that's kind of running out. The deadlines of that is pretty much run its course. But the thing is that fertilizer has indeed dropped. The spot market is cheap. The unfortunate thing is a lot of these ag chem retailers are sitting on very expensive supply. So depending on how flexible you are, that depends on that's the determining factor in what kind of prices you can get, how cheap you're going to be able to get your fertilizer. One thing that definitely hasn't come down is chemicals. Some of these chemical programs, a couple of quotes that they gave me, for a 2-pass program on soybeans, you're talking $100 an acre. 2-pass program on corn, $100 an acre. And so, this is whenever you pair that with the fertilizer costs that we've got invested in this crop, all of a sudden you plug all these numbers in, and there's just not a whole lot of margin there. Okay. And so you say to me as a farmer, hey, you know what, man, I can't make this work. I'm going to wait on a rally. Well, that's an awful big assumption that you're making. I'm not saying that I'm bearish. I already told you, I kind of feel maybe a little more supportive than what I have for a while. But at the same time, I certainly wouldn't walk into this planning intentions report and quarterly stocks. I don't know how many years I've seen this report absolutely lambast us with a very interesting quarterly stocks number, big acreage number. If that's the case this year, and you're already sitting where your margins are down to 20, 30 cents a bushel, I'll tell you what, you're going to be awfully upset that you at least didn't manage some level of risk, because we can do so in a very flexible manner.
We are having a conversation today with Matt Bennett of agmarket.net. Matt, you mentioned the quarterly stocks and the acreage number. And to that point as well, I'd love your thoughts here. That acreage number is going to be as of March 1st. It feels like maybe some things have changed market dynamic wise since then. But to your point, I agree with you. I've seen that report just lay waste to the market before. So I wonder how much, do we have to take it with a grain of salt a little bit? I wonder how this market could perceive those reports coming up.
Yeah, absolutely. I remember a year not too long ago, Jesse, it was when after Tyne had moved her U.S. Farm Report show to Kansas City, and they were still doing it in person. I was with Arlen Suderman in the office watching, because we weren't going to tape until after the report, of course. And acreage was high and stocks were high, and we were locked down the limit. And Arlen and I are sitting, what are we going to say? This is just a kick in the teeth, but you never know. You do not ever know. In that particular year, when we got into the June stocks report, actually, we kind of reversed fortunes a little bit. But the thing is that, panic sales, if you will, in a situation where you're down 30 cents, don't make a whole lot of sense. What I'm trying to tell people is, hey, you know what? Let's lock in a worst case scenario, leave ourselves some room to the upside if this thing takes off and runs, but at least cover our hind parts, because this could be a pretty rough go this year. You could have kind of a pendulum swing, if you will, given the fact that profit margins are going to be awfully thin compared to what we've been used to the last couple of years. Because let's face it, for 3 straight years, we've been very well rewarded for doing absolutely nothing from a marketing standpoint until harvest time rolls around. And I'm not totally sure that's going to be the case here this year.
Matt, on soybeans, I'm a little more concerned with beans, I think, right now. Just the way these charts have been looking. No beans on Tuesday, 12.96 at the close. So breaking below that 13 handle. What's your thoughts in soy? Are you worried? Are you watching closely? Are you not that worried? What's your feeling?
Yeah, beans in the teens no more. That's a frustrating thing heading into harvest. I don't know. I feel like that might be a tad premature. You take, for instance, this crop down to 33 million tons, like the USDA said, that was an 8 million ton drop. You raise Argentine imports 8 million tons at the same time, because what are they going to do? They don't want to let go of their soybean meal business. And so they're going to be crushing beans. Well, most of your private estimates now, Jesse, are down to 25. So, are you really going to drop 16 million tons over the course of 2 months? I think it's a very real possibility. And what are you going to do? You're going to have to import 16 million tons if you're Argentina, because again, they are the world's leading exporter of soybean meal, and they are not going to give that up easily. And so what does that mean? 16 million tons that Brazil was going to export to other parts of the world is just going to go to their next door neighbor. And all of a sudden, that's going to put us in a situation where what exports we do have available are probably going to be competitive. Yes, we're the most expensive beans on the world market right now. We're still selling a few beans. And I think that it's got a lot to do with what's going on in Argentina. So I've hated and been very reluctant to be bullish beans. with, for instance, $14 no beans and even $13.50 no beans and $15 old crop. Those levels have made me a little nervous to be bullish, but at this stage of the game, we are setting ourselves up for a situation where our world carry might actually be tighter than what it was a year ago. And if that's the case with U.S. carry at 210 currently, I'll tell you what, you could be looking at a very snug situation for this marketing year coming up. And so, I guess I'm not super aggressive at this stage. Now, with that being said, we're 70% corn and 50% beans as far as new crop goes. And so, we've been fairly aggressive to this point, but I certainly wouldn't have any issue with someone having a flexible type strategy and even extending that as far as soybeans go, because, $13 or anything above that historically is quite a good price.
How about this wheat market, Matt? I know we got really rough reports of the hard red crop on Monday afternoon, yet we come in here, we start higher, then kind of fall out of bed as well. I know KC spring wheat were only down moderately, Chicago wheat down double digits. I've seen some rain reports in parts of eastern Kansas and Oklahoma. I mean, that was about the only thing I saw that really contributed here today. What's your thoughts in this wheat trade?
Yeah, I just think that's what it boils down to, is people are hopeful that you're going to be able to heal up the driest areas of the corn belt. And in this case, obviously the wheat belt. And so, you're looking at extremely dry conditions still when you get into the western half of Kansas. I mean, it's just drought situation still, period. That's all there is to it. And so you don't need, a 2-inch rain ain't gonna fix everything. I can tell you that right now. You need a 2-inch rain in a little bit of time, and you need another 2-inch rain, and you need another 2-inch rain. And so you're going to have to see a wholesale change as far as this weather goes. Now, with that being said, you got good news from most of your meteorologists, forecasters, if you will, that are saying that this switch over from La Nina to neutral ENSO should be beneficial to some of the driest, hardest hit areas over the last year or two. And so with that being the case, you've got to assume maybe you're going to heal up somewhat. But that healing up needs to take place pretty quickly with a lot of this stuff coming out of dormancy here. You really need to see moisture in a big way, and it needs to come pretty quickly.
Well, Matt, let's go to livestock real quick before we run out of time. I'm going to say two things, one for cattle, one for hogs. I'm going to let you run with this here and get your thoughts. With cattle, felt like a fairly quiet couple of days here, squaring positions up as we got that March cattle on feed report out pretty much as expected. Wonder your thoughts there. Is a lot of these moves tied to the outside economic worries? Same in hogs as well. The economic worries, are they permeating through? But also, I just can't make sense of this hog market as of late. So I wonder your thoughts in both proteins.
Yeah. First of all, don't trade hogs. I just don't even try it, because the minute you think, well, gee whiz, this thing's oversold, it's got to bounce, they're going to take your lunch and they're going to hand it right to you and say, listen, buddy, stay out of the market. I can't figure the hog market out either. If you don't have heavy exports and that kind of demand coming into this, you're going to really struggle, in my opinion, to see this market rally substantially. As far as cattle is concerned, as fundamentally, I feel pretty strongly that this is a dynamic market potentially. Did we get a little overcooked? We were a little overbought, if you will. Yeah, I believe so. But you're also getting close to grilling season here, first of all. And I've got to think that moving forward, you're really going to struggle to break this fat cattle market. Now, I guess one thing that we always have to remember is that with all of the concern and the question marks surrounding the equities markets, I mean, typically your cattle market's tied pretty closely to equities. So, if you and I are sitting here saying, good Lord, our portfolio looks like crap right now, then you know what, whenever the boss says, let's go out for a steak dinner, you say, well, maybe we'll stay in, maybe we'll order pizza, because I don't want to spend $150, tonight. And when people start saying that, then yes, you could put a little bit of a dent in the arm. Now, as far as cattle on feed goes, cattle on feed was, in my opinion, some people called it a little friendly, some people called it the other way. Look at it versus a year ago, and I'm telling you what, this is a tight situation. There's no way around it. And the only thing that's really going to keep us from racing to awfully salty levels is going to be the equities, in my opinion.
Well, and to your point about that staying home, maybe, maybe folks, if they still want that steak, maybe just throwing it on their own grill or doing it at
Yeah,
home versus going to the restaurant, and spending
absolutely.
that money. That's for sure.
The cheaper way to do it.
Exactly. Cheaper way to do it. Sometimes it tastes better too. You like the way
I
you cook
agree.
your own steak.
I agree.
Matt, great stuff as always. Appreciate your analysis. Before we run out of time, any final thoughts you want to share real quick?
Now, just keep your head about you. I mean, the thing is, I understand there's a lot of different opinions out here, but the opinion that matters most is your own. And so make sure you're running the math on your farm. Make sure you understand what these prices mean to you. And if you want to step in and hedge risk, who cares if it goes on up? If you're still making money at this type of price level, then that's a great thing.
Well, and if folks need advice, I know they can reach out to you and the team there at agmarket.net very easily. You guys have a lot of great resources to share, don't you, Matt?
Oh, absolutely. You can get a hold of us. All you got to do is Google us. You'll find us pretty quickly.
Yeah, agmarket.net, their phone numbers, everything is all there. With that, Matt Bennett, appreciate the time. Thanks for joining us today and have a great week, sir.
Yeah, absolutely. Same to you, bud.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.